Have you ever wondered why you are still unprofitable? All the others that you started with are now profitable. Even some of those that you're using the same, even if you're using the same strategy, it's still you're still unprofitable while others are still making it. Why is that, and how can you fix it? Well, in today's video, I'm just going to be telling you, or at least, but yeah, I'm just going to be telling you what I've come across as for me, what I think, what I learned, right, in the past 5 years of me trading, right. So yeah, so first off, the first reason that just going to be sharing with you is that you don't want to learn from your mistakes. You just don't want to learn from what you are doing, right? So how do you counter this? You do this by journaling your trades. You can journal your trades. Journaling your trades actually helps you so that you can track which mistakes you are making repetitively, what you're doing correct, what you're supposed to do. That if you see that whenever I enter a reversal setup, I always lose. If I enter a continuation setup, I always win or usually win because there's nothing as always. But at least you are able to keep track of so like the bad habits and what you're supposed to do. If I over leverage or if I use a lot size, that is that much, I end up losing this much. So you end up being able to see this is the types of setups that I should enter. This is what I should do. This is what I should not do. If I enter a setup on the London session, I usually lose. If I enter on the New York session, I usually win. So you have to keep track of those and be able to learn from your mistakes and to learn from what you're doing correctly so that you can focus more on that and avoid the mistakes that you're making, right? So you should always be able to learn from your mistakes, from what you are doing right now, because it's if you're not recording, if you're not learning from those mistakes, then you're just wasting your time because the market wants someone who can evolve and learn from their mistakes and keep track of what's currently working, right? So that you'll be able to make more money or become at least profitable, right? The second reason is that probably you're just not consistent. You're just not consistent either with your strategy or with following your rules, with your trading plan. You are not consistent, right? So I want you to be consistent with one strategy, the one that you think is the best right now. So like what you prefer to trade. If you prefer trading BTMM, focus on that. If you prefer price action, focus on that. If you prefer order blocks, smart money, ICT, I don't know, you keep on trying that, keep on focusing on that until you learn that on BTMM, if I enter ID50, I usually win. If I enter this setup, I usually don't win, right? So you can do this also by journaling your trades so that you can see what works for you and what doesn't, right? And I want you to focus on that one thing until you find setups. There are setups that you are going to keep on winning over and over, right? Or most of the times, and focus more on those. So stick to one strategy rather than switching from one strategy to the next. You never be able to learn which setups or what you're supposed to do exactly with that strategy that is going to help you. Rather, if you keep on changing from strategy to strategy, you'll never be able to learn, right? So focus on one strategy. And if you think that you've tried it for 2 months, 1 month, 2 months, and you see that there's no result, then you can move on to the next and try it out again and see what works for you, what works exactly for you, right? And once you find what works, right, you can move on to the next concept, right, and find what you can add to the previous, to what's already working, so that you add on what's working rather than just adding strategies on what's not working and you're just making a mountain of unprofitable or not something that you can't use, right? You have a big bag of things that you don't even want, you don't even use, that are not working for you, right? That you're just keeping, right? So it's better to focus on what works for you, what you do correctly, what you want to keep on not doing, right? Third, most likely reason that why you are not yet profitable is that you are not applying risk reward ratio, or you are not applying risk reward ratio correctly, right? I don't know if there's a correct way of applying risk reward ratio, but what I think is that when you're applying risk reward ratio, don't just focus on saying, I only enter 1:3 risk reward ratio, I only enter 1:3 risk reward ratio. You should focus on the one that you're losing, that you are so like you are yeah, that you're actually losing, right? So on this one, is it $25? Is it $10? Is it $100? Right? Because if you are risking on this trade, you are risking, you have got $100 account. On this trade here, it's a 1:3 risk reward ratio, but you are risking $25. On the next, it's a 1:3 risk reward ratio, but you are risking $50 for 150. Yes, of course, it's a 1:3 risk reward ratio, but How much are you risking? So I want you to focus more on if I'm risking, if I, for my 1:3 risk reward ratio, I'm only risking $10. If let's say it's $100 account, I'm only risking $10, right? So what this forces you to do is you have to see where you are entering and where your stop loss is going to be. Calculate the number of pips over a year, right? And then what I want you to change is the lot size, right? So if your stop loss, if your distance between your entry and your stop loss is smaller, it also gives you a chance to what? To increase what? To increase the lot size. But if it's larger, you have to reduce what? The lot size, so that you keep on what? Risking the same amount for different amounts of gains, right? So it's rather better to focus on the risk, right? Because if you are risking this much and it's maybe it's a 1:5 or something like that, but you are able to increase the lot size, right? So you'll be able to gain more. And when you lose, you know that it's a fixed amount of $10. Rather than maybe this today you lost on $100 account, only enter four setups. It doesn't work because maybe you are risking 25 today, $25 on this setup, $50 on the next, $20 on the next, $10 on the next, and you've blown your account after entering only four trades. Rather, if you have a fixed amount that you know that if I'm risking this amount, then I will blow after maybe consecutive losses of maybe 10 trades, of which is highly unlikely that you find a winning trade in between, right? So focus more on risk to reward ratio. The fourth reason why you are most likely losing is that you are forcing your trades, you're forcing your entries, right? Maybe you have FOMO, I don't know, but you're forcing your entries, right? You just want to get in quickly, you're scared that the market will move without you, right? That's why I encourage you to have have a system, have a trading plan that I only enter when so and so and so have been met. You have a criteria for entry. Don't just enter because you have a phone and you have data and you've got money in your account. You have a criteria that I only enter ID 50, and ID 50 has to be after an impulsive move, and there has to be a flag. I enter when there's such and such a candlestick, or when the candlestick closes below the 30 moving average, or have a set of rules that you set for yourselves that if it's before 2 p.m., I don't trade. If it's before that and that, I don't do this. You have a set of rules, you have a system that you have to always keep track of, and so that you can be what so that you can keep on repeating what works, right? So like you are consistent over time, and you'll be able to what to become profitable, hopefully, because I can guarantee that you become profitable. The fifth reason why you are maybe losing, or why you are not yet profitable, right, is that you are over leveraging. You are over leveraging your account, right? You are risking too much, right? Hence, if you are, let's say, again for that $100 account, you are using a lot size, so like that's only gives you a chance to enter only 2 or 3 setups that might lose, right? Let's say you have 3 consecutive losing trades, your account is blown, right? That doesn't work, right? Rather, you should apply proper proper lot size, so that you don't over leverage your account, so that you might have at least 10 chances for you to enter. And obviously, after 10 trades, 15 trades, you won't tell me that you won't find 4 or 5 trades that you might win out of 15, right? And if you win those, you've already increased so that you have more chances to survive again, right? So you have a good risk reward ratio. Don't over leverage your account. That's why I said risk a certain amount. Then your lot size is the one that will be that will differ, but the amount that you are risking should be fixed. The sixth thing is most of the times, especially if you haven't been, maybe let's say it's after a month and you haven't even funded your account yet, and you find yourself as soon as you fund, very first day or within 30 minutes, you already have a setup. Usually, you are trading emotionally. You are forcing trades again, right? So you are not patient enough to wait for the market. You have fear of missing out. I haven't been trading for the past month. I think I just have to make money. You have to be patient when you are trading the market. You have to be patient for you to wait for your entry. If you take 3 days before your criteria for entry has been met, then take those 3 days just looking at the market. You should watch more than you act, right? Be a watcher than a participant in the market more, right? Because it's going to help you rather than just forcing trades and not being patient and taking trades that you just want to just because you've got money in your account. Don't do that. Don't force trades. Be patient and wait for your setup, for your criteria to be met. It will be met, and hopefully you'll make profit. The seventh reason why you might actually be losing money is that you have got too high expectations. Your expectations are too high. And having high expectations, I'm not saying that you shouldn't have expectations, but having high expectations means that you're going to over leverage your account again, right? So you should have, so like, reasonable. If you are blessed and you have luck or lucky and you are able to make more, then that's it. But don't have too high expectations. You can be dreaming of having a Lambo when you've got $100 account. You have to set realistic targets so that you don't over leverage your account, right? So you know what is going to work. So like, be reasonable. I don't know how exactly to put this, but just be reasonable and see, what am I thinking? Is it reasonable? Doing? Am I doing is what I'm doing correct? Exactly. Yeah, is what I'm doing correct? You should just, so like, if common sense, yeah, common sense. That's what I didn't want to say, but you should just have some common sense and have realistic um, targets, realistic expectations. Then the eighth and last thing is that most probably you are not listening to the market. You are not seeing what the market is doing. You are not reacting to what the market is doing. And usually, even this still applies to me most of the times, because maybe I'm in a trade, right? I see that the market has potential of reversing, right? And I just keep on holding with that trade because, so like, I've got hope, and I know that the setups usually works even if the market is showing me otherwise today. But so like, you just have that hope and you just want to keep on holding that trade. You want to control the market. That doesn't work. That is eventually going to lead you to lose that trade, to blow your account, because you are forcing the market what it doesn't want to do. You should react quickly to what the market, every market movement. If it's saying that, if the market is showing you that it's going to you reverse, then just exit that trade. It's better to exit with a small loss or a small profit rather than losing more money, right? So it's always better to exit, to react to what the market is doing, is showing, right? It's just the same as the weather. If you see that it's cloud, it's most probably going to rain. Say that if you don't have an umbrella, you're going to buy an umbrella. You're going to go out with an umbrella. You don't have to force you don't need to force the weather that I saw the weather forecast is sure that it's going to be sunny, so I'm just going to go like that. You don't have to force the market. React to what the market is doing, and you are going to become profitable, hopefully. Yeah, so that's it. That's my own thoughts. If you think that this was helpful, then don't forget to like, subscribe, and share the content. Remember, you are the bridge between where you are and where you want to be. So do the hard work, especially when you don't feel like it.